Hello and welcome everyone to Gold Asset of the Day, presented by myself, Phil Carr, at the Gold and Silver Club. So according to Bloomberg, 1 in 2 people have now turned to trading to combat inflation and take advantage of one of the biggest wealth transfers of our lifetimes. As you know, we've got rapidly surging global inflation. We also have a global recession. Alongside that, we have the currency crisis, we have the energy wars, and right now, this is a perfect cocktail for explosive moves in the commodity markets as you transition into the final 2 months of the year, which historically can be one of the most profitable for commodity traders. We have Goldman Sachs, Bank of America, Citigroup, JP Morgan, all preparing their clients for what they expect could be one of the most profitable quarters on record for trading commodities. You can see it, the day-to-day volatility, everything from the metals through to the energies. It's providing constant impulse moves where you can very quickly make a windfall amount of profit. At the start of this week, we took the opportunity on the big gaps higher that we saw on the open for the metals and the energies to yet again scale out of more profits with platinum. So we banked 1,102 points profit as platinum prices, they broke all the way back out towards their 2-month highs. Subsequently, within 24 hours, we've had a dip over a 300-point move back lower again. And really, this is just the name of the game. When you're getting these fast impulse moves at the moment, you can't spend too much time trying to analyze whether you should be booking those profits or not. You've got to keep locking in the profits when they are presented to you in the current market conditions. It's not a buy and hold market. If all you're doing is buying and holding, you'll end up making no money at all. And this again comes back down to the point that we have back-to-back trading opportunities. Now, at the beginning of this week, firstly, we had the Bank of Japan. They intervened in the market. The US dollar index that immediately dropped to the downside on Friday and yet again on Monday as well. This is the second time the Bank of Japan, they have intervened since September, and that immediately saw many commodities that had a slingshot move higher to the upside, but it didn't last. And this is the point. We then saw the dollar gather strength again later in the session on Monday, and commodities, they pulled back again, which essentially enables you to keep coming in, booking quick profits, and then essentially waiting for the prices to reset again and then reloading and then repeating this whole cycle. The next major central bank policy meeting will then be on Thursday this week. That's from the European Central Bank. They are anticipated to, again, aggressively increase interest rates. And with that, I would expect further volatility later on this week on Thursday. And then that's going to propel through to next week, where you then have the FOMC statement, so the interest rate decision from the Federal Reserve, where there's lots of expectation that they will be forced to pivot by the end of the year. And with that of course is going to provide lots more volatility for you to capitalize and trade on. Then next week, we also have the Bank of England on Thursday. And then Friday, we have non-farm payroll. And then the following week after that, we have the midterm elections in the USA. So you can see this is going to provide lots of massive trading opportunities for you to capitalize on. So what you need to have is a game plan as you go into these major central bank news items. You need to know what you're doing, the levels where you're looking to buy, the levels where you're looking to bank, and how fast the cycle is suggesting that those profit targets will also get hit as well. So what we've continued to do over the past week is sniper in when we do get these very sudden dips back down to areas of liquidity, and then very quickly when you do get these impulse moves as a result of central bank interventions in the market, you can bank a windfall amount of profit very fast in these market conditions. I don't expect that to change anytime soon. I would expect that to be the same playbook between now and the end of October into November and also December. This is why 1 in 2 people have now taken to trading to try and beat inflation, because this volatility, it is exactly what you need as a trader. You don't want markets that are in tight ranges just moving sideways. You want these big gyrations in price action for you to capitalize on and bank regularly windfall amount of profit in order to really maximize your portfolio. And that is absolutely the key right now in these current market conditions. Gold revisited those lows again. It came down to around 1,616 US dollars per ounce. Then the Bank of Japan, they intervened in the market twice now. We've seen very fast breakouts to the upside for gold. So essentially, if we do drop back down towards that area of liquidity, you want to look out for signs that central banks are yet again going to come in and intervene in the market. We're using real-time data-driven cycles to determine our entries, and alongside that, lining up with central bank policy, and of course, as well as the intermarket correlations, the ratios in the market, utilizing data, statistics, market intelligence, further aligning that with how the hedge funds, money managers, banks, and institutions are positioned in the market in real time. You can absolutely ditch those outdated technical analysis strategies and gimmicky technical indicators. You just end up getting chopped up all of the time in these markets. It's 2022, the age of data, and you need to be utilizing real-time data-driven cycles. Finally align that with the narratives, the macroeconomics, the fundamentals, the geopolitics, and that is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.